Hello, everybody. Happy New Year. Welcome to the 2021 edition of ETF Edge. I'm your host, Bob Pisani, and as always, three of the best in the business here with us today. Dave Notting is the Director of Research at ETF Trends. Jan Van Eck is the CEO of Van Eck Associates. And Harry Witten is the Head of ETF Sales Trading at Old Mission. Dave, let me start with you. We have seen record inflows into ETFs at the end of 2020, more than $5 trillion now, assets under management. I know you have talked before about inflows into ESG, and thematic ETFs as a major factor in the inflows in 2020. Do you think ESG and thematic ETFs will continue to account for a good part of the inflows in 2021?
Yeah, absolutely. I do. I mean, this was a record year in so many ways. We had over $500 billion in new money flowing into the ETF industry, over 300 new funds created for investors to trade in. Most of those new funds fall into the category of either something that's not beta, whether that's thematic or actively managed, or something around ESG. Those have been two core themes. I don't think those are going to go away anytime soon. I do think we're heading into a world where folks are a little more concerned about risk management, but thematic ETFs for sure are here to stay. We've all seen this K-shaped recovery and how it's really nominated winners and losers in the market, and investors and advisors are really out there trying to find those winners.
Yeah. Harry, I want to go back to ESG and talk a little bit about that and thematic ETFs. But I know you've spoken in the past that active non-transparent is going to be a major factor for ETFs in 2021. And you also mentioned significant conversion of mutual funds into ETFs. We saw dimensional funds starting that trend. Can you explain a little bit more about these two trends to the viewers and why they're going to be important in 2021?
Hi, Bob. Thanks for having me on. Sure. So on the non-transparent front, if you look back to January of last year, there was not a single non-transparent fund available. Come the end of December, we had roughly 20 funds that are out there. And I think starting in 2021, you're going to see a lot more of these new products coming out. You're going to see a lot more of the traditional mutual fund companies coming out with these products. I know Fidelity specifically has already said they're going to clone the Magellan Fund and have that as a non-transparent ETF. So that's going to be pretty exciting. I think that's also going to make a lot of people more aware of these products. Now, on the conversion front, a lot of these traditional mutual fund players are looking what to do with the existing assets, what to do with their existing book, and they're looking into changing them into ETFs. There's already 3 firms, like you said, one of them being Dimensional, that have come out and said we are going to be doing this. The Dimensional specifically is going to change 6 funds and over $20 billion in assets into the ETF structure. So this has a huge potential in the marketplace to see a lot of assets being moved quickly. And if you look at what Vanguard did in 2020, they were telling people actively you should move your mutual fund share class to the ETF share class. They have a little bit different structure than a traditional ETF, and that's what they're doing.
Harry, let me just follow up with that, Harry. Do you think that the move from mutual funds into ETFs could really turn into something really significant? I mean, could it account for a sort of second wave of ETF inflows that are really statistically significant? In other words, could we see $8 trillion or $10 trillion in ETF assets under management in the next several years, essentially a doubling? I'm just asking, how significant is that?
It's a very good question. I don't really know the answer, but it could be significant. A lot of the mutual fund assets are going to be in retirement plans, so you don't see those moving. But non-retirement plan assets or stuff like that, you could definitely see a very big chunk. I mean, $20 billion from Dimensional alone in 6 funds. That's a lot of money.